Hey, what's up, guys? This is Qui-Gon Jinn back for another quick price update. This is my handle here on Twitter. Follow me there if you want to see how I interact with other traders, analysts, and influencers. Whatever, follow me there on Twitter at Qui-Gon Jinn. Alright, guys, so I'm going to do something a little different here. I'm just going to talk about the levels. I'm not going to bring up everything. I'm just going to talk about the levels real quick because what what is most important here, basically, what has happened with this daily candle on Bitcoin that just closed a few hours ago is it's the first daily candle that closed outside of this box. So Bitcoin is breaking my box, people. It's breaking my box. Um, this is what I called the magic box or whatever before. I was saying that we really need to get up and stay above this box if we want to see sustained bullish momentum from this point. And I made a video about that on this. I forget which day it was, this day or this day. Um, but either way, here's the thing. I said if there was consolidation inside this box or above this box, it was good as a bullish sign to continue upwards almost immediately. But as you can see here, we still have yet to close any dailies above the 50 or 200 daily SMA. We also haven't been closing any bodies above 61,350, which is also a crucial zone. Looks like you're really more or less just getting repeatedly rejected by the 50 SMA. And you can see that here with these lower highs. So you ended up getting these lower highs coming in. And now where it sits is we were closing every daily body for a week, for a full week. We were closing above that 58.5 zone that I was talking about. Now this is the first daily candle that has broken that zone and closed below it, closing below 58.5. Now it really did attempt to hold up this 57.526 area. So I mean more or less 57.526. Yeah, like I hope you can see the prices on my chart, so I don't have to explain them in detail down to the dollar when I'm talking about it. Hopefully you can see it well enough on the chart. So just keep a note of that for future reference. But basically I'm going to try to say round numbers. So 57.5, you did close above 57.5, but just barely. It was 57.511 and still close below that 526 area. But anyway, it looks like you're trying to hang on to it because you did open there. You just barely closed, like you closed right around it, and then you opened right around there as well. The open of this candle was 57.511. Well, yeah, obviously the same as the close of the previous one, but yeah, now you're trying to bounce from that level. You did wick down, so the open was 57.511. The low was 57,000 even, almost pretty much 57,062. So you're trying to hang on to that level. But here's the problem. The wick up of the high was just right around 58.5, 58,494. So as I said before in my previous videos, and you can go back and watch the previous videos for like a little bit more detail if you want. But what I said was if you do hold up this box, then we can continue to break up. But what I said was what would turn me bearish is sort of closing below. I mean, you're kind of losing the trend. And when I say bearish, I mean, short-term bearish, obviously. But you're losing trend. You're losing this box. Bitcoin broke the box. But that's just the way it is. Yeah, now it's trying to find some footing here. 57.5, but it's getting rejected by 58.5. So far, I mean, it looks like I shouldn't say it's getting rejected. What I should say really is that it's meeting resistance there at 58.5. Now you did have a little bit back here. I was saying holding the 200 on the 1 hour was good, but then you fell through it here. Now you've got a death cross on the 1 hour. So if it does hold this level, I would really only kind of expect it to rally up into that death cross if it even makes it that far. But right now, this is acting as resistance, the bottom of the box. So we had a little bit of consolidation below it here and a little bit of consolidation below it here. But then you got this, oops, then you got this lower high again. Right here. Putting in that lower high there. So I mentioned this being an important level, 61,350, and it tried to get through it 1, 2, 3, 4, 5 times and didn't manage to break it. And you've gotten lower highs since then. Now you've got this more immediate lower high after, falling through the bottom. Whereas back this time, it looked like you were trying to gain your footing back up. This whole move, this right here, like, these just look like liquidity sweeps to me, and I'll touch on that a little bit more in a minute. But anyway, yeah, that's acting as resistance now. You can even see it on the very low time frames. Like if I go to the 15-minute, nicked right off of it. If you go to even the 1 minute, we had this big move up just earlier tonight, and it touched just the bottom of it, and then it's starting to fall back down again. So anyway, long story short, guys, I think losing this box, closing a daily below it, that's not a good sign. It's starting to flip my shorter term sentiment from more so bullish to a little bit more bearish in the short term. And like I said, it's the data week. They're just flushing people out, playing ping pong with the leverage. So, and you're still below these moving averages. So I mean, that's kind of where we stand. Kind of got to break a higher high and get through this level if you want to see any change. Otherwise, until then, you want to be able to hold up these levels like 55.8 and 54.1. I mean, it might dip a little bit lower than 54.1 because of the liquidity that's down there. But if we draw a fib, like I said, this box, this is the new box. Now that we've lost the old box, now we broke the old box. Bitcoin breaking boxes over here like a stud. You got this 0.5 to 618 zone, and that 55k area acted as a strong level back here when we were discussing it back here. So ultimately now this is sort of the box that you want to hold. I don't know if we're going to be able to break back up and back above 60k immediately. I think if you use the bottom of this box as resistance, then it's almost, it's become much more likely that we're going to come down and test these lower levels, in my opinion, now. And then this 53.2, I mean, that's not even, I don't even think that's really relevant anymore. I mean, you might see some support there, but I don't even think it's really relevant, so I'm going to take that off the chart. So, still getting lower highs for, like, basically the past week. And I think that it's becoming much more likely that they're probably going to want to go take out this liquidity here, like between 53.8 and 54.5. But then you do still have this hotspot up here, which is growing, $785 million at 62.8. So that's still up there, but I'm looking like it's much more. You've got this area here that's going to act as resistance. I think it's much more likely that they're probably just going to go scoop that one, since that one's more or less closer now at this point. But short liquidity has been building up quite a bit. It's been building up more and more. So we've got all kinds of liquidity building up overhead, and there's not really too much more below us to go get, because long liquidity is not really being built up anymore. It's already, the majority of it was already taken out back in this like flash crash sort of thing. So it's still building up ahead. I think it's incentivizing. I think what they're doing with the price is they're trying to incentivize people to short. Short liquidity will build up, and then eventually, once if we get down here to clear the rest of this long liquidity, which isn't too far away, I think at that point we'll get another flip, and the shorts will start getting targeted again, because it's getting really hot up here in this heat map, guys. It's getting really hot in these areas. So that's going to be the target. basically people need to just wait. Stop building up the long liquidity because that's gonna be quicker to get. It's just closer, nearby. If you want to go long, I would wait for that to get taken out. In my opinion, I think that's the way that it's just gonna go. Like I said, I think they're enticing people to try to short so the short liquidity can get built up. They're trying to make it look bearish so that short liquidity can build up, and then boom, one day we're just going to shoot right through it, and nobody's even going to be looking at their chart when it happens. Ironically, that's how it always happens. So yeah, just keep an eye out for these levels. 50, 55.8. You did kind of have a bit of a bounce off of there. This is like that 0.5 level, drawing a fib like that from there, and if we do come up and we reject anywhere below 60K, or even if it's just the bottom of this box, then I think it's pretty likely we're going to probably come down, just scoop that liquidity, maybe come back up, flip this again, and then we have a better chance of flipping that box on the next go around. And then that would kind of be in line with, if we look at this fractal that I had drawn. Hold on, I'll draw it again. Just bring this out a little bit. I don't want it to be huge, but I mean, kind of, sort of playing it out, I guess. I don't know. It would take a little bit of fiddling around with it to really get it to match up at this point, but I don't know. I mean, like I said, I think we might need to endure, and like the last video, I think we might need to endure a bit more liquidity sweeps, maybe just a bit more consolidation before we can really break to the top of that range again. And we'll take it day by day. I'll try to stay updated on that. But for now, those are the prices you want to watch out for. If we reject, below 60K again, or even below this box repeatedly at 58.5, then I think it's pretty likely we're going to go down to at least 58.5, consolidate there for a little bit, potentially down to 54.1, and like on the liquidity chart, like I said, there's liquidity all the way down to like 53.8. So just keep an eye on that. Others still kind of chugging along, still kind of going sideways. And I mean, yeah, you're still above this 180 billion area for now. I don't know exactly how long that's going to hold up, especially if Bitcoin is looking pretty bearish. At the moment, you do have this incoming death cross in the 1 hour. So it's the opposite of what I said. So if you have this death cross occur, and then the price comes up and it rejects from the 200 SMA, then it's probably pretty likely to go down a bit further. And then I don't know if we're going to have like a double bottom and then a bounce like that, and then we go, sort of more towards the top side of the range. Or this is others market cap, by the way, the altcoins, basically the altcoin market cap. Or I don't know if we're going to do that, or if we're more likely to do something that, we come down and have a dead cat bounce and do like an inverse cup and handle type thing, where we come down lower. But we don't want that. We really don't want that, because you don't want, I think at worst we would see 130 billion, but I don't think that would be super healthy at that point to go quite that low. Even though the prices would be good, I just don't think it would be overall healthy. I'd like to try to stay inside this green box, or at the very least above 143 billion or 144 billion, at the very least, on others. So yeah, not much has changed there. Still below 200 billion, still above 180 billion. Until one of those levels gives away, we're not going to have much of a better idea of what's going on with the altcoins there. So US 500 actually had a pretty good day. Very green day. Not bad. You did get above this box, and you got above the 50 daily SMA, so That's good that you're back above that on the S&P 500, US 500. This box I was saying, breaking through this box, like the 5400, taking back 5400 was a huge deal. And then 54,450 or 5450 rather. Taking back that was a huge deal. You open there, you shot up, now you're above this 5500 area basically. Really 5496. You're above that area. And so that's good. That's looking good for the SPY. If you can take back this zone and then continue up, maybe we get a swing up, to try to make a slightly higher high. But this is the level that you're going to have to contend with now, more or less, is this previous high where it got rejected. But I mean, more or less, yeah. The S&P had a pretty good day. And I think that a lot of that is due to NVIDIA. And if you look at them, if you look at this chart, 1 hour chart, and then go back to this one, 1 hour chart, I mean, they are more or less freaking identical. Because most of the S&P is made up of, well, not most of it, I shouldn't say most of it, that's wouldn't be accurate, but a lot. But I think it's like 8 or 9% of the S&P is made up of NVIDIA at this point. But yeah, so NVIDIA did pretty good, back above 119 level. You had this pretty beautiful. Oh, that's not what I wanted to do. You had this pretty beautiful W-shaped pattern that you broke out from, and as a rule of thumb, you want to be able to hold the center of that. So if you can flip this support into resistance, if you can flip that resistance into support, which you broke through it, if you were to come back and test it, because look, it looks like you have a gap here. Right here, you actually have two gaps. You have a gap right here, and you have a gap right here. So be careful, because it might want to come and fill those gaps. And if I just draw a quick fib there, I want to see if this actually lines up with those gaps. And yeah, I mean, if you made a 0.5, you would be holding up this level actually pretty well. If you made a 0.5 retracement there, 106, you'd be flipping the center of this W pattern, and you'd also be filling one of those gaps, maybe not the other one, but the biggest one. This biggest gap right here is the one that is more likely to be filled. So, I mean, yeah. But at the end of the day, it's like, NVIDIA is looking good, S&P is looking good, and it's strange that Bitcoin is not really following as much. And I had spoken a little bit about the economic data. The CPI actually came out better than expected. So they were forecasting 3%, and it came out at 2.9. But it looks like the CPI, core CPI, core CPI came out as expected as well. So I don't know. It's strange to get a bit of a bearish reaction out of Bitcoin. Maybe people saw it as sell the news or whatever. But I mean, the S&P liked it, and stuff like NVIDIA liked it. So yeah, I don't know. The other thing I wanted to take a look at was DXY, because DXY has been slowly, steadily breaking down from some levels here. It's been losing some levels. This was an important level to lose, this 104 area. And then it found support here at 103. But when it tried to bounce, it didn't even quite make it back to that level before getting rejected by these bull market support bands. And then you actually had a pretty steep step down in the DXY. But now you've got a higher low, and it's attempting to take back this 102.91 area. So if it does that and it rallies back up into these MAs, where you got the bull market support band, you've got the 50 and 200 SMA. If they cross, even if they have a death cross, you could still see a rally back up into it, and that's going to put some short-term pressure on risk assets, and Bitcoin is a high-risk asset. So keep that in mind, that we might be seeing a bit of a bounce. I mean, realistically, this thing right here, to just point this out, this is a massive, oopsie daisy. This right here is a massive symmetrical triangle formation. So even if the DXY was to come down here, if it found support on this trend line, realistically, even if it dropped a little bit more, everyone would probably start getting super bullish on risk assets. But realistically, even if it drops down here, bear in mind that it could bounce and make a shot back towards the top of the triangle again. And this is actually, it's not a bullish pattern or a bearish pattern. It's a neutral pattern. And I actually love symmetrical triangles. They're one of my favorite patterns. They're one of my favorite chart patterns. I can actually get rid of a bunch of this crap, and I'll clean up this chart before the next time that I show it, I promise. But yeah, just to get some of this stuff out of our way immediately. Symmetrical triangle, one of my favorite chart patterns. It's a neutral pattern, but it does tend to have a slight bearish bias if it's forming after a move down, which this one has. And this is a pretty macro size pattern. So just be aware of that. I mean, like I said, it's not bullish or bearish. It could break up and out of here. I seriously doubt it's going to do that. I think what's more likely is that, if anything, if it does come reach the top again, it's going to get rejected and make yet another lower high here, like it has been doing. And then I think it's more likely that it's going to break down out of it and continue further. Maybe down to some lower levels here, like you see. And then this is where shit is really going to start getting crazy. When the DXY really starts breaking down, then risk assets are going to go nuts. Because that's just the way it is. There's less pressure on risk assets. The DXY represents the US dollar, and assets valued in US dollar are going to go up as the DXY is going down. As the dollar loses dominance, risk assets go up in price, and that's just the way that it works. So anyway, just keep an eye on that. I'll give you some more precise levels when I see them coming about. But for now, you've got this MACD pushing up. You've got the stochastic trying to form a higher low here on the daily. And also, I mean, look at watch out for these. I mean, you've got Nvidia. Nvidia is looking great right now, but look, you've got you're getting a bit overbought on the RSI, and the stochastic is starting to flip downwards. You've got your MACD looking like it's about to flip downwards. It might be a little bit of bearish momentum coming in there. And then this little green foggy part, I think that means that you're towards the top of the Bollinger Band. Let me grab the Bollinger Band. Yeah, so see, you broke through, or you didn't break through, but you hit the top of the Bollinger Band, and that's what this foggy green represents, is that you're hitting the top of the Bollinger Band. So watch out for those things. After something's been ripping, yeah, it did technically break resistance, but you've still got a bit of consolidation to deal with. It could potentially be putting in a lower high. The same could be said about the S&P 500, whereas its oscillators itself are actually looking pretty similar to Nvidia. So the S&P, even though it is breaking levels and charging to the upside, it is getting a little iffy when it comes to how much more momentum it has. It might have to come down and sort of test this level again before trying to continue up. I don't exactly know. I don't know the future. This could be like a positive. We could be in a positive gamma zone and we're squeezing shorts out or whatever, and people have to hedge long. and have a bunch, and basically buy a bunch of calls instead of puts. So the market could still continue to go up, even though it does appear to be losing momentum here on these shorter time frames, like the 1 hour. But just be aware of that it has been pumping and that it could sell off a bit. I'm just gonna put the Bollinger Bands on here to see where it's at with that. Because yeah, see, look, you were breaking out the top of the Bollinger Bands, and that's where you started getting this foggy green area on the RSI, and then your stochastic is crossing over. You even got a red histogram on the histogram bar. You get a red bar on the histogram for the MACD after a bearish cross. So yeah, that's pretty much where we're at. We're gonna have to wait for Bitcoin to play catch up if it's ever going to. My guess at this point is that this area is gonna act as resistance, 58.5, and that you're more likely to come down at this point. And that becomes even more likely if the S&P opens and has a red day tomorrow, which tomorrow is Friday, so you could expect there to be a bit of a sell-off just because of profit taking. The price has pumped. People might be taking profits. So you might expect a bit of a sell-off. But it would be good to stay above 5,500. If you lose that 5,500, you might be looking more like the 5,350 area. So anyway, yeah, keep an eye on those levels. But yeah, that's pretty much all I've got for you guys today. So please be sure to like and subscribe. And again, go ahead and follow me on Twitter at QuagonJin. And every interaction helps the channel. So if you like, share the video, share the posts, share it all, and definitely just subscribe to the channel if you like the content and you want more updates like this. And that being said, I hope I see you back again in the next video. So take care and have a good night.